There's something else happening now. The UK mini budget is a really big deal. You look around the international monetary system, international economic system. It's very hard to find any leaders or policymakers who actually know what they're doing. But Kwarteng seems to be an exception. This is the right budget at the right time. Then separately, you have the collapse of sterling and the collapse of gilts. Another big deal. That has almost nothing, I would say practically nothing to do with the budget. I understand there's some contemporaneity. People look at it and say, oh, this caused this. The collapse of sterling and the collapse of budget is part of a global monetary contraction, pending global financial crisis, having to do with the dollar shortage.
Jim Rickards is an investor, editor of Strategic Intelligence, and author. In this video, we present his interview with GBNews on the falling sterling and the truth behind the monetary financial system and how it affects the common person and country at large. It is without a doubt that the international monetary system right now is in shambles, so many policies and policymakers providing nothing, no hope, no working policy, absolutely nothing that would guarantee a leeway for progress. There is also the case of the sterling. The context for sterling today is very different from that which prevailed during the sterling crises of the 20th century. The days of exchange rate intervention in the sterling area are long past. Nevertheless, the sterling's effective exchange rate could be vulnerable to changes in expectations about the UK triggered by, for example, fiscal policies lacking credibility or adverse new information. The government is facing difficult decisions about how to navigate the cost of living crisis. Inflations and recessions can lead to social and political conflict, which was notable in 1931 and 1972-79. Even small changes in long-term expectations can have a large impact on the exchange rate, as currency markets discount the future and recalculate its present value. Stocks are down, gold is down, oil is down, the global economy is plummeting, and global markets and currencies around the world are down against the US dollar.
Dollar shortage. You look around markets around the world, UK, but sure, US, elsewhere in Europe. So what's going on? Stocks are down, bonds are down, gold is down, oil is down, the euro is down relative to the dollar, sterling's down, etc. You look around and say, wait a second, everything is down. How can that be? And the answer is the dollar is up. The dollar is, if everything's denominated in dollars or translated into dollars and the dollar is going up, it follows that everything else is going down, which is actually deflationary, which is coming. So that has to do with basically a desire to get dollars to buy collateral, specifically treasury bills, to post as margin to support $1 quadrillion of derivatives. And for those not familiar with quadrillion, that's 1,000 trillion. So it has already hit China. Well, we'll look back and say that these interest rate increases, and by the way, we've had 3 75 basis point hikes in a row, June, July, and September, and maybe more on the way, maybe another one in November. That is tightening money. It's tightening money at exactly the wrong time. They should back off on that. The central banks are kind of irrelevant. The Bank of England has blundered with this gilts purchase. They made the classic mistake that the UK made in 1992 up against George Soros. They set a deadline. In 92, it was a fixed exchange rate. Here, it's a deadline. The minute you set a deadline in any financial activity, the market trades against you. It's like, I'll just short the Bank of England and collect my winnings on October 15th. So that was a blunder, but not unusual for central banks. But you're right about but what I was describing, where I disagree slightly, Liam, what I was describing is independent of the interest rate hikes. Now, those are tightening at the wrong time. That's a blunder. But this dollar shortage, which people have difficulty imagining, say, hey, the Fed printed $7 trillion. How could there be a dollar shortage? The answer is the printed money. And this is true for the Bank of England also. This is why the gilt purchases have no stimulative effect at all, because you buy the gilts from the dealers and then they take the money and give it back to the bank in the form of excess reserves. So it doesn't go into the economy. It doesn't actually do anything. So these are all forms of monetary tightening at exactly the worst time. People are worried about inflation, and rightly so. The inflation is right in front of us. This is going to turn to disinflation and deflation very quickly, certainly by this winter, early next year. So that's why when I look at Liz Truss and the budget, to the extent that you can get stimulation from fiscal policy, not from monetary policy, but from fiscal policy. That's what she's doing. So looks like as I say, the right budget at the right time. But when I saw the IMF criticize it, I thought to myself, well, carry on. The IMF has been wrong about everything for 25 years. So when they take a shot at the UK budget, I was like, well, okay, you're probably on the right track.
There is inflation in front of us, and the last thing to do is what the Fed and the central banks are doing: money tightening and printing more money. This just leads back to the same cycle, and the money becomes irrelevant. It doesn't do anything for the economy, leading to disinflation and deflation, which may be closer than we think. IMF criticized the fiscal policies of Liz Truss because fiscal policies do not give stimulation to the economy and are virtually of no use, especially in an economy like the UK, which is on the brink of collapse. Jim Rickards seemed to agree with IMF on their criticism, but what we are wondering is if you agree as well. Let us know what you think about the monetary financial system in the comment section below. Don't forget to hit the like button, subscribe, and turn on notifications. Thanks for watching.